Hello. On behalf of the Women and Young Members Excellence Committee at ICAI, I extend warm welcome to all of you to the Sky High Symposium series. This series is conducted by the committee to share technical updates, enhance non-technical skills, and encourage our members to confidently express themselves in public forums. This initiative aims to empower and inspire our members to step forward and make the most of their abilities. This series is conceptualized by chairperson of WYMAC CA Preeti Savlaji, who is also chairperson of Sustainability Reporting Standards Board and vice chairperson of Valuation Standards Board for the year 23-24, and vice chairman of WYMAC CA Abhay Chajerji, who is also chairperson of Commercial Laws, Economic Advisory and NPO Cooperative and vice chairman of Accounting Standards Board. Sky High Symposium aim not only to provide essential updates on technical knowledge, but also to foster non-technical skills. And we aim to empower and inspire our members to confidently step onto the public stage and excel in their verbal expression. Today's session in Sky High Symposium number 67 holds the promise of enlightenment as we explore the subject areas of risk-based internal audit and breaking your comfort zone. So I would like to introduce our speaker for today, CA Kaveri Venkatraman. CA Kaveri is a BCom, FCA, DISA, and detail-oriented, hands-on, and technology-focused senior risk management professional with more than 20 years of experience in internal audit, internal financial controls, ICFR, and regulatory compliances. Her experience span across different industry verticals with mutual funds, insurance, security broking, foreign banks, NBFC, manufacturing, entertainment, hospitality, etc. Before joining Writer, she was a partner at NMAH and Company. Prior to that, she has had a rich entrepreneurial journey with her founding venture, Kaveri Venkatraman and Associates. She started her career with NM Raiji and Company. During her tenure at various organizations, she had pioneered numerous initiatives that include establishing risk management practice, developing and servicing internal audit system and cybersecurity audit, IFC, ICFR certifications, RBIA frameworks, SOP drafting, and process reviews. I hold the position of head govern. She holds the position of head governance, risk, and compliance at Writer Business Services Private Limited. So over to you, ma'am, Kaveri Venkatam.
Thanks a lot, Vidisha. And it's an honor to be a speaker here at this forum. So, do we just start off? I'll start presenting this, or do I have to wait for some more time?
No, ma'am, you can start.
I can start, fine. So, I'll just share my presentation, and can we have it like an interactive session where we don't wait till the end and we can have questions as and when it goes? Is it fine?
Yes, fine.
Fine. Okay. So I basically will take you all through as a journey of what internal audit has been and how internal audit has actually driven from a situation of transactional audit to how now it's come to a point of where organizations look at us for governance, consulting, and risk assurance. So these are the various topics that I would try and touch base today. So this is actually purely my own way of expressing how internal audit has been through my experience of being in this subject with practical as well as a little of what the regulators and the governing bodies say. So what do I really mean by types of internal audit is basically with respect to how internal audit as a function can get into various different areas where I can, give piecemeal audits to the organization and add value to them. If you see how an internal auditor can concentrate only on compliance audits, how they can give value add for an IT audit based on the knowledge and the experience that we share in the IT sector, And I'm sure in how ICA also promotes this. Like even during our course, we have a lot of areas where they give us the insight into how can we do audits through technology. So we can take that as an aspect of giving clients the feedback on how we can do an IT audit. The operational audit, where we understand the organization business, understand how their organization actually conducts, or what is the process, or what are they adopted, and accordingly give them an audit feedback. And we can categorize our audits across all these. It need not be fully only transaction checking. We have financial audits also, where I know a lot of organizations don't, we really don't get into the internal audit sphere of financial audits, but there are niche areas where they offer, they say we need a financial audit by some external person. We have management audits, which actually drives this through the actually the management drives this, saying that they want to know how an organization is actually working, what is, where is their organization positioned with respect to their mission, their strategies, how is their resources. So there are very aspects where we can have a management audit to be done. And of late, we'll also have a lot of things like culture audit, how that and all can be envisaged under a management audit. We have environmental audits which come into our bucket. Like it comes, the whole thing comes under the sphere of internal audit risk assurance, where we can categorize them into various buckets and maybe specialize within an internal audit into these areas. This is something which I wanted to just give an introduction, saying that how internal audits can be positioned into different aspects. Then we have, so anything that you all want to add on, or with experience, something that you feel that we can take it here at this position? Does anybody want to add on to it? Fine. So I'll continue with this. So I have certain provisions which are applicable for internal audit, which I've tried to collate, which says that where does, which organizations or where, which corporates actually require an internal audit. So how a company listed on a stock exchange needs a compulsory internal audit to be done. How an unlisted public company has, under certain circumstances, how it needs to be, saying that key, uh, how though, which are the categories, which are the limits that they have to fulfill, whereby they will be requiring an internal audit. Or a private limited company, under what circumstances would they come under the internal audit requirement. Now the concept is, though this is all set in by the Companies Act, we still have organizations who are startups or companies which come up saying that internal audit, they basically want it for with respect to uh, how they can improve their efficiency in various areas. So though we have regulations saying this, but the point of view is, now internal audit has gone as a support system, and organizations look at internal audits whether it's mandatorily required or not. So then we understand, we'll have to get to a situation, what do we feel internal audit is, or what are we saying internal audit is, what, how do they want to uh, say that internal audit actually say, shows what, or what is the evolution with respect to how internal audit has come up to this situation. So initially, if you see, as I'm sure most of you all would have seen this, saying that how internal audit is most transaction focused, and it was more of a situation where we were only auditing transactions, saying that these vouchers are there, these bank transactions have happened, purchase vouchers, sales, but it never, there was not a collation or anything of what would be the position after auditing all this. Then it actually went through the process saying that, okay, this doesn't really add value. And the organizations were looking for something saying, okay, let's see if our policies and procedures are being followed. Let us have an independent view. Along with the transactions, can somebody tell us whether the transaction falls under the internal policies and procedures or the regulatory policies and procedures? How can we consider that? That was another way of looking at it. Then they had points of view. Internal audit started giving subjective opinions where they knew the organization, they were doing it for a long time. So there were subjective opinions that used to come up, saying that this is what we can do or how value add can happen. Then came the situation when we had automations and when we had situations where everything had to be objectively driven, had to be put up in a system where the system would throw out certain things, saying that how it is being complied or what is being complied. So that came up saying that the compliance objectives had to be met. That's how they started doing objective analysis of every compliance to policies, procedures, the transactional requirements, the regulatory requirements. So that's how we have gotten into more objective aspect. And then that's fluent in saying that once your objectives and your compliance and your policies procedures are done, we then shifted into internal controls whereby regulators started saying how are we managing the controls, how are we managing the risks. So once we're managing the risks, how are we ensuring that the controls are in place? So that's how we evolved, saying that from transaction portion, how we got into a controls aspect. So this is a common thing that everybody knows, at least in our profession, that how does the first line of defense work? How does the second line of defense work? And how is it that internal audit comes under the third line of defense? Now, we have aspects where internal audit can fit into a lot of places. Like even the second line of defense, we have risk management or we have a compliance where there is a role where it fits in the second, but we need to have an aspect where this is finally, before it goes to the audit committee, how does it get audited and how does it get presented and they get the value out of that, the controls are in place. These are the various definitions of internal audit, how it's evolved through the Institute of Internal Auditors, the ICA, how it has created a committee where internal audit can be, there's a discussion, there's an organization which tells us what internal audit can do, how there are concepts, and how it's more of an objective and an independent assurance uh, that it brings in than basically a just an audit. So now basically, though it's called an internal audit, I feel it would be more receptive and accepted by the organizations when we really mention that it's more of a situation where we are like a governance concept and we give the organization the support system. So if you see a lot of organizations where there have been in-house internal auditors, they look at them as a more of a support system and a backbone to be a liaison between the management and the functional people to give them the right direction to ensure the controls are there. So more from audit, it has become more of a consulting aspect. So this is just a few quotes which people have across said, like internal audits are considered like doctors of the organizations who understand what the pulse of the organization is. Then more internal audit, how it needs to be is the best one is how do you create a rapport with your client? How do you understand that you're one amongst them and then understand how to give the solutions? Or how do you build an internal control, the corporate governance concept, or the accounting processes so that we are the people who are able to get this and rectify this in the right direction before a statutory or an external auditor comes into the picture. Okay, these were few milestones which happened during how from 1900s to 2000, how this audit has shifted. Like earlier, it was, as I said, it was a clerical work and there were a lot of theft and fraud. So they wanted people to be on that aspect, how an internal audit profession can. That was the major purpose behind it. Then it became more of an operational auditing concept, where the business oriented and how the operations are conducted. That was more of a aspect. Then it slowly shifted to financial reporting. How you can, what is the financial impact? How does it get reported in the financial? What are the compliance aspects? More towards, then it started to internal controls. Then it shifted its concept to the business aspect, like how an internal auditor can understand the businesses of the organization and what are the guidelines around that, and how can an internal audit professional uh, add value based on their consulting and their internal audit aspect to the business class and the business concept operations of this. And finally, from maybe around 2000 onwards, if you see, we are more of a consulting and objective assurance that we give. We add value. We do the risk management. We do the risk controls. We have we try and acquire expertise on the environment audits, on the culture audits, and also a lot of organizations now even got in the concept of ROI, of how an internal auditor can add to the ROI of the organization. The return on investment, how they can manage that, and how what valuation can they give on that. So these are a lot of things which are now shifting, and now internal audit is looked at as in a very different aspect. So that's why that's I just wanted to give a gist of how internal audit has moved on. Then this, I'm sure all of us know very well that internal audit has got a lot of standards, which I believe as of now are all, it is there as a guidance. We need to follow it. And once it's mandatorily done, it is like, it is very easy. And it is very nice to have this uh, standards. It's very easy to implement it, and also it gives us the guidelines, the framework, saying that how do we go forward with any audit. So I'm sure any of you all here would have taken up these, or used in their this all these aspects. What I'm saying, it wouldn't be something new, you all, right? So if anybody wants to share any experience, please go ahead and we can have that in between, right? So these are a few standards which I said I will put it up, saying that we need to actually benchmark whatever we do against these standards. It makes a lot of difference. It gives a lot of professional touch, and it also ensures that we are not missing anything when we are actually doing an audit, or when actually giving the value to the organization. And a few of them, if you see, the series are different because their concepts or the perception behind them are different. So each series has got their own way on where it has come from. So based on that, it would be easier to interpret the standard and put it into practice. Then we have a few objectives of internal audit. What are the major objectives of an internal audit? uh, if I say proper control, perfect accounting system, the review of the business and how it is happening, or what asset protection, how do you keep checks on the errors, or how do you detection of frauds. So the main objectives that I would feel is the proper control is identifying risks which are there, and how do we give the management the assurance that there is control over various risks that an organization would envisage or is exposed to, and there is controls at each phase or each point, whereby we can take it up, saying that how do we ensure. And each type, one thing I'll tell you, each organization keeps evolving, so the risks keep changing. So there needs to be a continuous monitoring, continuous review of where does the risk stand, and where the controls are in aspect in proportion to that. So how do we really give the management the assurance of the completeness, the authenticity, the accuracy of the controls? That's one aspect or one objective of the internal audit. Then we have the proper accounting system. So internal audits, large by and large, when we have a lot of CAs doing it, we have a lot of chartered accountants all across the globe are into this internal audit point of view, cater to this line. So we need to be sure that the accounting system or what goes into the accounting system is accurate, is correct, is complete. Because finally, when you link anything of your financial aspects, because whatever you show, whether there's a gap, the value addition, the controls, the risks, it has to be monitored against a financial figure, which gives a clear perspective to the organization, saying that where or what is the level of uh, impact. See, we can talk on impact based on the rating, the grading, but everything has got a financial backup to it, which the organizations, the promoters, or the owners of the organization would relate to. So we need to ensure that this base accounting of all your transactions is done properly. So there has to be a check around that. One of our objectives to ensure that that is happening. There is, whether it's automated, manual, that we'll have to be taking a clause on. Then we have to understand the business of the whichever organization we are doing an audit. We need to be sure of the business of the organization, so that we know that whatever what is required for the business is taken care of. And what is the, maybe there is a general rule of certain points which may be more important to a particular business but may not be as important to another business. So we need to understand the nuances of the business to ensure that we are able to give that type of a feedback. And our audit report talks accordingly, saying that where it affects the business and are we in sync with what the organization is into. Now, asset protection is another area that really ensures that how do you ensure that the physical assets vis-a-vis what is recorded, other more so is how is the organization having a control over all its assets. It could be IT, it could be non-IT, it could be their own assets with respect to any other third party assets. So it is across assets. It's not only the point of view of whether it is recorded properly or not. That is one aspect. But the other one is how do you take care physically, how it is there? How do you ensure its safety? How do you ensure its longevity? So there are aspects with respect to how you can do an asset protection audit and ensure that the organization does it. If the organization is a high on asset, this becomes a very important aspect. How do you keep checks on errors? Now, this is basically when we do a financial audit, we'll have to determine or keep our pointers ready, saying that what could be the errors and what are the errors that we are looking for with respect to particular organizations, accounting, background, their business, and the way of their history into this. So then we understand what type of errors can come in. How do we really understand spotting it? What are the counter controls even if this error happens? So how do we mitigate that, or how do we ensure that these errors are kept and they are checked? See, all these things, once we do these objectives, we then arise out of this, any of these, we will arise on a point of view, are we detecting any fraud or not? See, we can't go with an aspect saying that there is fraud going on, that there is error going on in any organization. That's never an intention. But when we are actually doing all these things, we need to have a back of the mind aspect saying, does it lead to any fraud? Does it lead to any sort of a, employee committing something which is requires a check or which requires a deep investigation? So this is something that should come out of all our audits, and how do we really come up to it and give that type of a feedback. These are the few objectives. I'm sure there are a lot of other objectives which we can, as we go and as we see, we can improve on or add upon it. The services that various internal auditors can provide. Okay, the various opportunities that we have as of now, what I've seen with various internal auditors, the organizations tell us they want to do as a diagnostic review of the processes. Now, diagnostic review, basically they would want us to just take an overview and understand and tell them where are the gaps and where do they feel we need to deep dive. That's one. We also get involved in mandates or arrangements where internal auditors study the processes and they are in the process of preparation of SOPs, standard operating procedures for the company. So which could be some sort of an service which is one time, or it becomes like a service which is annual review, reviewing and reconstructing the SOPs based on how the organization functions keep changing. So that's one type of a service. Then there's a service of capex review and reporting. Now, capex review basically now comes up to a situation of not only just ensuring their books of accounts and what the capex is, it goes to an extent of pan India verification, the physical, the tagging. So companies actually give the whole thing as a package, saying that you do the physical verification, you map it with our books, you ensure our regulatory aspects, you ensure the tagging. And there are a lot of geotagging concepts for IT assets and everything, which are also coming into the concept of when we are doing this capex review and reporting. So it ranges from how an organization is set up and to what extent they want to tighten this type of a review. Then we have internal management audits. Management audits are something which is deep dive into a specific area. So the management could come up saying that we want a specific area to be deep dived, and how we can ensure that that type of an that particular area is working fine or not. So here what happens is we end up giving some sort of a opinion. We need to be very careful that if that particular area that we have got is connected to few other areas, we need to be sure that the feedback that we give are not limited to that. We give areas which are open, we give suggestions which are open, saying that this could happen or this could be a suggestion if the related areas are monitored in a particular way. Because otherwise a management audit, we can't look at it as a separate silo if it is bifurcated. The areas are interrelated, but the management says, I just want you to review a particular area only. That is something that we need to be very sure of. Systems audit is very, very clear. So, as chartered accountants or internal auditors, when we do systems audit, we generally do systems audit through basically on application systems, where we ensure how the application system works, whether the input, the controls, the access, all those things, and then the output, how it works. We really don't go into the concept of the backend or the network protection or the VAPT or the firewall aspect. We only ensure that they are there, they're documented, but we don't get into the system to penetrate the system to understand whether it's working or not working. So, from the point of view of a systems auditor, if we don't have a specialized IT person or a digital person with us, we restrict ourselves to saying that we look at the application system processes and their working. So we are clear on how the system works, and the main thing is the backend aspects, the maker checker concepts, the login concepts. All those things are checked in the systems audit. Internal financial control. See, I have two aspects: internal control on financial reporting. Now, what the difference which I have seen in the organizations, even we do internal financial control, we take up all their departments or functions, and we do their basic risk assessment and control mitigation aspects that they already have, and how best they can improve on it. And it could be related. See, everything that an organization, a company does in any organization is finally related to the finance, because you have a financial loss here or there. So this basically, what distinction happens is we do this for all the functions in an organization, all the departments. And when it comes to internal control and financial reporting, it is only done with respect to the financial aspects of the financial statements. And then we give an assurance on the control, saying that what is it. So it could be like, a processing, whatever directly hits your balance sheet, P&L, those controls, those aspects are considered and they are deep dive and done. Now, risk-based internal control is something that's a vast subject which is now being catered to, where all internal auditors are getting into this risk-based internal audit by the normal internal audit aspect is still is categorized into identifying the risks. Either the company has identified it and you work upon it, or you identify it and you have to give the risks and see what the existing controls are, and then work upon the transactional testing and how do you ensure that the controls are effective. Like there's test of design as well as test of effectiveness. This is what I've explained here, basically what I went through in the previous slide. I've just taken up a few of them and I have explained them in detail to just give an overview of how we can do this. But just believe me, everyone has got their own style and how they can do these audits, because it's something that you have to be passionate about how you are going to add value. So this is something that each one can add value to the way it has to be done or the way it can be done. Now we come to the topic of how risk assurance is handled under internal audit these days. So we have a corporate governance practice. So a good corporate risk management basically comes under saying that you have a good corporate governance, you're maintaining a sound system of internal control, and how are you providing that the business uh, should undertake sound decisions. So what they look at, business organizations look at, is they look at internal auditors' views, suggestions to answer that how can what to drive their decision making concepts, on what level they can rely on this. So risk management has come to a situation where how company can manage their risks to ensure governance and ensure their further or future decision making with respect to all business aspects. So this is a very simple risk framework, but if you really go in the market, or when you get into an industry, it's not so simple. The framework is really complex in a lot of cases, in a lot of organizations. So it becomes very difficult to categorize. But on a broad basis, this is the framework that companies follow. Basically, the risk identification, the risk assessment, how they are, what is it, what is the risk response that they have, how are they monitoring it, and based on all this, what is the strategy or the objective setting that they have to do. Now, in under the risk identification itself, it goes to a situation from how you have your functions or your departments or your operations working, and then accordingly you will have to uh, categorize and understand how the risks can be identified, where all can the risks can be identified. So whether you have an SOP, you will have to have these walkthroughs with the concerned functional person. So there could be certain processes documented, certain processes not documented. Now, when they are not documented, it could happen that they are on a situation of how it can affect your risk identification. You miss it, or how you will identify the concepts of where the risks lie, because that's one main step before you really assess the impact or how you are addressing the risk. So once that identification is done across your organization, then it comes to the assessment of the risk. How do you assess a risk and how do you put it across and say that whether the risk is high, whether the risk is low, what is the impact, and how do you have to deal with it. Then you have a risk response, which says what are the control measures or what are the concepts that are there in a risk response. How do you respond to whatever level of risks that is assessed, and how do you ensure the mitigating factors? Once these are set, there has to be monitoring. The monitoring happens in two ways. Keep reviewing your risks, whether it is the same or it's increased or it's decreased, and also how are you ensuring that whatever controls you have put in are effectively working. So monitoring also has an aspect of review as well as ensuring that the controls are working. Based on all these things, you can then strategize, or you can objectively set your goals, how it can be, or where you are headed to, or how you can take further decisions on what you can do and how you can take the organization to. So now, what is the role of a management in risk assessment? So the process of identifying a risk is basically what are the hazards or what are the roadblocks in the growth of an organization. That's how the management would look at it. They will evaluate how are we evaluating on making the decision making concepts, and based on that, how are they going to be responding to the risks, and how do they design, or how do they ensure a framework to mitigate. So basically, when these are the pain points, or these are the points the management is looking for, they look for all these concepts outside, saying that how can a consultant help us do this, and how can an external person come in and help us design our framework. So this is how this has become more important with respect to risk. And if you go to see, it's not something new, because every function or everywhere, risk is something that is always there in anything that you do. So you, whether we say okay, the risk of even conducting a particular event like this, there are a lot of risks which you mainly take care. Now, if I give an example, our tech team really ensured that before the session starts, everything is working fine, and there is no situation of this. So he actually envisaged a risk. What if the presentation doesn't work? What if the video is not working? So the assessment or the risk identification is there throughout our life. It's only how observant or how aware we are. Okay, how do we take it? So now management has become very aware, saying that okay, there are risks in our organizations, and how do we really take it through, and how do we really address it? So that's how risk management or risk assessment has come into the picture. And how risk assessment, how do we involve a risk assessment in internal audit? So how do we position an operational area in the context of the organization? How do we say this is the organization's own risk framework? How do we fit it into there? Okay, these are the operational areas, and how are we ensuring that the areas are getting fit into the overall risk management framework? So that's something that now an internal auditor needs to understand, and how we can do it, take it forward, saying that how are we going to be helping the management manage the risk. So how this assessment allows us? How do we provide? They want a assurance. The board wants an assurance for how the risk management processes are being managed, how they are effectively, put in place. So this is something that the internal auditors very nicely can do it with their experience and with the areas that they have under their audit. Like they have a lot of the freedom that they have, the knowledge as well as the capability to go and assess any business operation or the operational or the data. So now it's come to a position where every data is actually picked up and analyzed and understood key how do you really audit across. So you have a population, you have tools to slice and dice the data, and then you understand key where exactly the risk lies and how do you have to proceed. So that's something that I feel internal auditors are really trained to do, and they're wired to do that. So how, even that's the ask these days, that how do you really assure it, and how do you really focus on the areas which are really critical for internal controls. So that's how it's now got to a point where how do you involve management says key, how are you get ensuring that the risk assessment is getting built into the internal audit. So this is the framework that a risk-based internal audit process would follow, or could follow, saying that how you can take a risk-based internal audit approach. So basically, how do you define the objectives, the risk appetite? So risk appetite is something very important. In any organization, we need to really understand what is the organization's concept of risk appetite, or what is the level of risk that they are ready to absorb, what is the level of risk that they are ready to live with. That's one thing. And then the others need to be addressed. So that's one thing which we need to be able to define at the beginning of the audit to ensure that we are addressing what the organization can do best. The second thing is how do we, so the first one, risk appetite, also falls under the organization culture. There are organizations which are risk averse. There are organizations which are very happy to confront and say, okay, let's see when it comes, and we are ready to take up the risk. So that's one thing. Then we have the business understanding process in a risk based internal audit, where we actually assess how, what are the business objectives, or what are the business processes that are going across. It could be that they are in the similar industry, but across industries, they have various, the processes can be different even if you are in the same industry. So, the understanding of the business processes is very important for us to frame, create a framework or create an audit universe. So, after that, we prepare an audit universe considering what the objectives are, what the risk appetite is, what the business processes are. It could be geographically also. So, we need to ensure that how are we looking at the geographical spread of the business and the risks associated with those geographical areas. So these are something that we have to look into. Prepare before we prepare our audit universe. Then we have a concept of identifying risk. We have risk. Identifying risks is basically, if I tell you, is when you're actually getting understanding or defining understanding the business process. You're creating an audit universe. You automatically get into the groove of saying ki which process or which activity will really lead to some sort of a risk. So those RCMs need to be created. The risk matrix needs to be created, saying that these are the areas where you feel or you're identifying key these processes would have these risks. Then you filter depending on the tolerance levels. See what risks can be tolerated, what can is in the under the acceptable level. You categorize the risk. You have to score a risk. Now, scoring of risk can be done in many ways, saying that how you can from 1 to 5, high, medium, low. It all depends upon what objective or how the organization wants to look at it. Most comfortable way of looking at. Finally, it all ends up to what is the highest risk that is there, and where there is the least control. What is the most concerning area or the block that the organization will have to look at. So once you do the risk scoring, so basically this is developed to ensure that you have a objective and a subjective aspect to risk assessment. Because if you don't give at an objective aspect, it becomes very difficult to ascertain how do you show the management how risky a particular area or a particular process is. So we try to combine both with this. So there are umpteen number of processes or formulas how you can do the risk scoring. Then you summarize your risks based on whichever audit areas you are taking up, and you summarize them based on how you are going to do, whether it's a highly risk based area or which is the priority. So accordingly, you will have to put your audit areas in that sphere. You assess your control environment. So when you're assessing your control environment, you will have to ensure that what are the existing controls that are already there, whether it's manual, whether it's automated, whether it's a preventive control, whether it's a detective control, or is it something saying that it has to be something address with respect to, it's a semi-automated type of a thing. It gives a little flavor of detective control, but how does it really work on the ground? So there are a lot of ways in which you have to assess the controls which are there, and it will differ from company to company. It's never the same across. Even if the process is the same, it's never the controls are not the same which are there, and we have to see the best suited control for the company. So that's where we understand the control environment. We map it across in our RCM to ensure where to find out where the gaps are or how it is being done. We define a residual risk rating based on the risk scoring and the control environment that is there. Then we arrive at a residual risk rating. Then we define, based on the residual risk rating, we define what should be our audit frequency. How often do you want to audit this particular area, or this particular audit function or a process? And accordingly, you will have to define the frequency in your annual plan. You will have to define an audit plan saying these are the concepts, get it approved, allocate resources accordingly, reassess your risks, and you keep modifying. So this process keeps flowing every year. Maybe it depends upon how volatile or how agile your company is. So then it keeps flowing accordingly, and it keeps getting modified based on the requirement on the ground. So that's how the risk based internal audit process practically works on the ground. Then we have the key factors for an audit universe that you will consider would be, what are the organization's objectives? So basically, what the organization wants to achieve in their long term. What is their mission? How do you inculcate that into your audit process, your assessment process itself? How is an organization structure? So the hierarchies are different very well. Every organization has got a different hierarchy, saying whether it is be a centralized control, decentralized control. Is it family owned? It's promoter driven. It is institutionalized. It's an MNC. So it depends upon how the organization structure works. Based on that, your audit universe, these are one of the key factors you need to consider when you're considering your audit universe. The business processes, the roles, and the roles of each and every department that is there, the geographical locations, how it is placed across, and which geography you need to consider. So this is basically, I have just given a diagrammatic approach of saying how, if the risk assessment, when you do a risk assessment, if it's a trivial risk, you have a very strong control. Why it is a trivial risk is basically your controls are very good, and how you have the critical risk that is there, you feel the control is actually missing, and how do you plug it? This is something that we keep seeing in our things, see how in our audits and in our reviews, how we can map this. So this is what I mentioned, where we have the highest level of risk with the least level of control. So if you see, this is more probably everybody talks about this as a heat map. How do you ensure? How do you see this? So if you see the top, for me, the top right cell is the most riskiest area, where you need to ensure that your controls are set, and you have a proper control mechanism to ensure this risk doesn't get triggered. So this is something. Then how do you evaluate your risk scores, your audit plan? What are you have to keep evaluating. So the process is once set. It's not that it is there for eternity. You have to keep reviewing this. You have to keep working on it, saying that how can you make it best. So it could happen that the review or the evaluation happens during your audit itself. So you are actually auditing an area, and you understand that the what you understood at the time of walkthroughs, or at the time of understanding the business and evaluation of a few areas, but maybe the criticality has changed, based on which you need to change your frequency of audits, or even the timings of audit is basically whether you need to do it. If there are many shifts of an organization, you need to understand which timing of the day would you take up the audits, and how are you going to be reporting to the audit committee. So this process of evaluating these aspects would keep changing, maybe during the course of the audit also, and during maybe an annual particular type of audit where you're revisiting the plan. So this we need to keep in this, that nothing is fixed, and we are not saying keep this plan is fixed, we only go by that. As and when we move, if we find few areas where need a change, we have to get that into the picture. That's one. Yeah. So now this is one thing which is very important is that most of the regulators have taken cognizance of this, saying that how a risk-based audit needs to be uh, got into practice. So if you see RBI, IRDA, SEBI, these are all Indian, and we have Sabas actually for the US. How they are all come up saying that how the risk-based internal audit is very important from their aspect, and they have to have this into the this, and regulators have literally forced, in the sense now it becomes mandatory for an organization to follow. And once you have our BFSI sector following lot of these regulations, it falls through for many other companies, because organizations associated with the BFSI or the service provided associates again will need to adhere to this. Because if you see how it has been framed, how the RBI framework or the risk framework that the regulators have framed, it affects everybody who is in connection with the BFSI sector. So it becomes like, everybody is tuned or mandatorily required to keep upgrading their risks and controls mechanism in their system. And this has become an annual audit where regulators need CAs to give this type of assurance. And if you see a lot of organizations where they are regulated by SEBI or IRDA, they need the particular auditor to even clear some specific exams, so that they are sure that we have understood what they require and how we have to deal with it. So that's also come up saying that how you have to keep improving and enhancing your knowledge and understand. On also there's one more point, like though they come up with a lot of checklist, and there is a guideline saying that how you need to do and what are they expecting, there's also a point of view of why they are doing this or why they want a company to do this. Why does IRDA want an insurance company to do it? So there are a lot of things. How do you interpret that point, and to what best extent can you give the assurance? So it's not only that they get it done on a regular basis from the organization and from chartered accountants who are associated with the organizations as auditors, but these independent regulatory authorities also come in for a review on a regular basis to understand whether it's being followed or not. So they also do their own checking and their reviews to ensure that it's being done. So basically, it's come up to a situation where BFSI caters to a lot of our consumers, which should be at the this. So that's the main reason it started with there, and it flows through everywhere across the industries. So you see, RBI, when it's come up with so many things saying that where it's applicable to banks as well as non-financial banking companies like NBFCs, the housing finance companies. So these are certain categories where they have kept key. If it reaches this limit, there will be a risk-based internal audit which needs to be done, and you need to submit, and it has to have that framework, it has to have those details, and the audit report has to be within that framework. There has to be audits within it. So this is something that RBI has come and said, not only banks but also we have NBFCs and HFCs that need to adhere to this. We have IRDA also having same thing, which comes up with the risk-based supervision for the insurance sector, and that also has got a proper framework, what it needs to do, how it actually if you follow through all these regulators, the guidelines are very similar. So basically, they cater to one thing is what is the customers with the customers that you are attending to need to be secured, the vendors whom you are associated with needs to be secured, and how you are ensuring that your in-house and your systems, and how there is no there is least possibility of a sudden breakdown. So that's basically what, if you see those guidelines and the framework that they are suggesting, it caters to a lot of aspects of a particular uh, organization. So that's one thing that they say. And they also have systems into their concepts. Like they also want to ensure that there is a lot of importance to the applications of the systems used. And with, if you see the last week that we had the data protection, the DPDP Act that's getting passed. Now this will all strengthen to an extent, saying that how do we ensure that there's data protection framework also inbuilt. So these are a few aspects that we have regulators have come up with. So SEBI has also come up with a lot of concepts saying that how, where the internal auditor have been involved, and how do you do this organizational policies, reviewing the organization policies, and also streamlining the organization policies, and how do you ensure controls and detection of frauds. So these are a few things where we are saying that the regulators have become aware. They are very on their toes to ensure things are being done. This we are also aware how a lot of US companies, listed companies, have their companies in India. So there are a lot of companies within India where they would require these SOX audits to be done, so that they are able to in turn report to their US counterpart. So this also now becomes a part of how do you have this framework, how do you do this. So there are a lot of expertise within our profession to get this also done, and this is one way, one more avenue where we can look at seeing that how do we ensure SOX compliance, mainly process controls. How do we ensure the working of the processes? So SOX has got their own listing of this, and if you see a lot of places, these controls are also envisaged in our standards in a few areas. Uh, then, if I want to just summarize what risk management or risk assurance concept was, is basically the risk management framework and the role of the management with respect to the risk management framework. How do we want them to behave? Then, how the internal audit function can be evolved from control based activity to basically a risk based activity. So, in order to, why this is in order to support the management. Then how do we carry on the process? The process audits with respect to a risk-based aspect or a risk-based function. Then the regulatory aspects that are depicting key, what will be the requirements, benefits, what adopted for the risk-based internal audit. I just had I had some two case studies with respect to what could be scenarios in a particular sector or so, saying that how you can categorize some instances into a high, low, or a medium concept based on how it, what is the impact of a particular transaction. So that's something that I had envisaged. So I think if there's anything that anybody would like to contribute, I'm sure all of you all are also into either practice or with the profession, with the industry, where you can give me some feedback saying that how this can be done, because almost I think this is something that I have got, saying that how we can address this type of a situation where we have a in how we will be able to evolve an internal or a audit into a mainly a risk based audit, and how we can categorize them into various aspects with respect to the business process, with respect to various other uh, functions, and add value to the organization. This is something that I had, so I said I'll share with you all. I think this is what I would have this. But if I could have some more interactions, then I can maybe we can get into a point of where what can be done further in this profession as such. Anybody? Anybody wants to add on to this or anything?
Hello.
Yeah. Hello. You can hear me? So fine. So one more thing I can basically tell you all is this has been something that an audit profession, like when you are a young chartered accountant, or when you want to really process saying that key how you can make internal audit as your profession. So that's something that comes up saying how much deep dive you can do. So this is something that you have to create a passion into the audit. The various methods or the ways of audit that you choose becomes a little specific. So even young chartered accountants who are interested, but this doesn't come like an internal audit profession or a risk assurance profession that you get into cannot be something that is overnight, or you cannot have a situation where you can literally get this uh, as soon as you clear your CA. So this has got a lot of concepts of where you can deep dive into it and understand, pursue this as a passion and a career into this whole profession. So I basically have covered saying that how you can take this profession, where this profession as an internal audit has evolved and has got importance now with various consultant, whether you are a consultant to an organization from an external aspect or whether you are an internal in-house internal auditor. So these are some aspects which I have seen through my career and how I we have can deal with these within our framework, and also how we can add value, because unless and until we do this, we cannot be an aspect like if you go to see a lot of scams that come up where the statutory auditors are picked up for saying that how you are doing it or what is it, they're questioned and their quality of audits and everything. But I feel once we also ensure how do we add value to this could be a situation where we are also getting a tip of we are giving a tip off to the management, and we have followed a quality check, and we ensure there is not a big disaster or big scam, something that we can adhere to or we can try and see whether it can be done within the frameworks. So this is so if you see internal audit as such, now it can be done, it's done either physically or it's done through a digital media offline. So when it gets into a situation of offline, I would like to touch upon a few areas saying that how systems and security aspects of an offline audit with an online audit for internal audit would require. So when we see when during COVID, when we had these audits which were had to be done online, there were a lot of issues with respect to how do you share data, how do you ensure that the data shared is encrypted or protected during their path? How do you use a VPN? So this is one thing that's evolved now, saying that which are also there in the cyber audits or this systems audit of various regulators. And how do you ensure that the data that you're giving for the auditors or any external people are getting properly protected? So this is something that has come up, saying that how we evolved from the situation of manual audits. We go there manual in the sense we are offline to the client, and how do we audit them, and how were doing a good job with an online audit also. How do we ensure? And we also kept the aspects of how internal cyber security and the systems can be taken care of. So this is something that we can see that we are also evolving over the period, and there's nothing that we can also. It is something of an initiative that each person who has passion in this subject can pick it up. And we anyway going for our fee our forte is very big, saying that how wide it is, how we can, where all we can enter. It's not that it's restricted, saying that oh, you only see this aspect of ours. Once you are in an in-house organization, you have the aspect of governance, which encompasses the whole organizational aspect. So you get into a lot of areas where you can see the linkages, and you can also ensure how you can add value. So nobody restricts our field. It's only the choice and the level of knowledge and the extent that we can get into, and how we can relate it to. So everything, if you go to see, we'll have to relate it to a framework, saying what is our technical knowledge with respect to the business knowledge, with respect to the regulatory aspects. So this is something that I have seen, and if you see all our regulations also over the period have envisaged this. Now, when we have a data protection and data protection act, this is not something new that they have passed it as an act. But if you go to see in the previous, all the regulators have been intending to do this, saying that how do you protect anybody's data and how do you ensure. So this is all coming under now a concept of, though they have specific people like a data privacy officer, they need a DPO, they need everything, but then the monitoring or the control aspect again comes into saying that governance aspect, saying that how everything is governed and how do you put everything into the same aspect, putting it into the same bucket. So this is something that I would say that internal audit can add value to, and it the profession evolves from a normal and get into various aspects and global laws. And also when we are doing a multinational audits, we get to a position where we touch base various laws and various aspects of how it is getting how is affecting across the globe organizations or functions. So this is something that we need to look into this profession. So what I can do is there so these topics with respect to internal audits or risk assurance that I covered, basically we'll talk about the basic thing of how I can encompass everything under the uh, internal audit concept, which though looks very small, but it covers the whole aspect of a gambit of every profession or every law or regulation that comes into the picture. So this is unfortunately I don't have a slide where I can take you through a few of the other this, but anything you want to deep dive into this specific aspect, I can maybe deep dive into it and tell you further what we can deliberate into these aspects of internal audits and risk assurance.
Hello.
Yes.
Kaveri madam, you have explained the subject very nicely. I have one question.
Sure.
If there is no regulatory or statutory requirement for a private limited company,
Hmm.
and management asks us to
Hmm.
do internal audit and give them a monthly report, how
Hmm.
should we proceed? How should we proceed, and what areas should we cover? Uh,
Yeah. So basically, if it is not regulatory governed, it gives you the aspect that the management is being forward looking to come to a point where they want to have their organization risk free, or they want to get to a position where future regulatory aspects they can adhere to. So when you are actually planning this audit and they want a monthly report, is basically you will have to arrange with them what are the total operations of the organization, what is the annual functions that they are getting into, and does the management look for any specific repetitive areas? Like suppose they are more adherent to saying, I need compliance update every month, whether I'm adherent to all monthly compliances, or I have something saying that I have a point of view of very whether my cash management, or if they're highly cash management concept, whether the cash management aspect is being handled. So there could be maybe different aspects which they want a regular monthly update, which you can keep in your plan. And then based on the operations of the organization and their 5 year plan, what they want to do in the next 5 years, keeping that vision, you can split saying that every month or every quarter, what you can do is you can take a specific area and say, I will deep dive into that area and give a specific report for every quarter. Or you can create their RCM saying that this area I will maybe map up your risk. I will list down your risks, saying that each area that I pick up, I will list down the RCM for you. Then ensure how the controls are there. So this is like something you're giving added value, saying that over a period, though regulatorily they are not governed, but maybe they want to do this now when they are not governed to achieve something or get to a level like an IPO, or a investor coming into their organization, or they're
Yes.
going to face something in future where they want some funding. So if they have to get to that, they will have due diligence. So keeping that forward vision in mind, you may have to plan it, saying that what all areas we need to take on priority or set right before we get to the major areas.
Means major areas we should cover compliance. Um,
So major
then
areas
any
that you can
specific
cover,
area.
yeah, any specific area that, see, it depends upon if the organization is very cash rich organization, in the sense cash management organization. They do a lot of transactions with respect to cash. Cash, I mean, is not hard cash, maybe even banking. But then you understand ki how do you take up those receipts and payments audit at a risk level, saying that revenue completeness, and ensuring that all your management with respect to the expenses are being taken care of, it's budgeted versus variances, how that is happening. You can also devise an dashboard of an MIS for them, saying that every month what they would like to
Okay.
see, whether their assets are properly, how good they are statutorily complied, how good their internal policies are being followed, and then create a score saying that at what level they are. So month on month, they can see whether they're improving, or which areas they are improving and how they are improving.
Okay.
So it's something that you will have to deliberate and discuss with them to understand and come to a position which is more important to them also. And based on what they want to do, how you can give them the 1 year assessment.
Okay. Thank you.
Yeah, most welcome.
Thank you, ma'am,
So this
for
is,
the wonder.
yeah,
Thank you, ma'am, for the wonderful session. Um,
thank
Actually,
you.
the
I
madam
hope I'm able
internal
to
audit,
add value somewhere.
madam internal audit covers the entire aspect of the business, but you explained it
Correct.
so clearly and concisely, and like a lot of information in a few words we are getting from you. I think. Uh, Thank you
Uh,
for the wonderful session. Uh,
yeah, thank.
now, now, likely to propose to thanks propose to vote of thanks to all of you. I am C. Sonia Gupta, and opportunity of giving thanks to Madam C. A. Preeti Salva, ma'am, the chairperson of Women's and Young Members Executive Committee, C. A. Ajay Chhaja, sir, who chairperson vice chairperson, who is who, who constant support and guiding lighting, giving us the valuable things to organizing the trendy topics like this internal audit and all of us. I also thanks to my esteemed speaker, CA Kaveri Venkataraman, for
Thank you.
giving such a wonderful session, ma'am. Really, it's
Yeah,
covered
thank
lots
you.
of things in the PowerPoint presentation. And I also thanks to not I also thanks to organizing member and committee members to their making their respective roles to conduct this webinar so successfully. And not last but not the least, I thanks to the participants to listen patiently this webinar. And I also thanks to technical team and for conducting the program so smoothly. Hope everything is thanks for the day and thanks for the time we spent with you, ma'am. It's a very good opportunity for us to listen to you, ma'am. And thanks
Thank
to
you.
all of you. Have a nice evening, ma'am.
Thank
Have a good
you.
day, ma'am.
Same to you. Thank you.
Thank you, ma'am. Thank you.